Most people spend their lives focused on making more money, but very few people spend enough time protecting the money they already have. You can work for decades building savings, investments, and assets. But one unexpected event can completely change your financial situation if you do not have the right protection in place. A medical emergency, job loss, unexpected repair, lawsuit, identity theft, or family crisis can quickly turn years of financial progress into a major setback. The truth is, building wealth is only one part of financial success. Protecting that wealth is just as important. Financial protection is the foundation that allows you to keep moving forward even when life does not go according to plan. It is about creating systems that protect your income, your assets, your family, and your future. In this video, we are breaking down the complete guide to financial protection. We will cover emergency funds, insurance, asset protection, identity protection, estate planning, debt management, income protection, cybersecurity, retirement planning, and creating a financial safety strategy. The goal is not to prepare for the worst because you expect something bad to happen. The goal is to create confidence knowing that you have a plan when challenges appear. Financial protection gives you something extremely valuable: options. When you protect your finances, you reduce stress, avoid unnecessary setbacks, and create a stronger foundation for building long-term wealth. Because financial freedom is not just about growing your money. It is about protecting what you build. The first step in financial protection is creating a strong emergency fund. An emergency fund is one of the most important tools you can have because it provides a financial cushion when unexpected expenses appear. Many people experience financial stress because they do not have enough savings to handle emergencies. A car repair, medical bill, home repair, or temporary loss of income can force people to rely on credit cards or loans. An emergency fund helps you avoid turning unexpected problems into long-term financial damage. A common goal is to build enough savings to cover 3 to 6 months of essential expenses. However, everyone's situation is different. Someone with a stable job and fewer responsibilities may need a different amount than someone with unpredictable income or larger financial obligations. The important thing is starting. Even saving $500 or $1,000 can provide protection against smaller emergencies. The goal is to build the habit first and increase your savings over time. Another important part of financial protection is separating your emergency savings from your everyday spending money. Keeping emergency funds in a separate account reduces the temptation to spend it on non-essential purchases. Your emergency fund is not meant for vacations, shopping, or lifestyle upgrades. It is designed to protect your financial progress when life happens. The second major protection strategy is creating a realistic budget. A budget is not just a restriction tool. It is a financial awareness system. When you understand your income and expenses, you can identify opportunities to save, reduce waste, and prepare for future challenges. Financial protection starts with knowing your numbers. You cannot protect what you do not understand. Tracking your money allows you to make better decisions and create a financial plan that supports your goals. A strong financial foundation is built through preparation. The more prepared you are, the less likely unexpected events are to destroy your progress. The next major area of financial protection is insurance. Insurance is designed to protect you from financial losses that could be too large to handle on your own. Many people think of insurance as just another monthly expense. However, the right insurance coverage can protect years of financial progress. Health insurance is one of the most important forms of protection because medical expenses can become extremely expensive. Without coverage, a major illness or injury could create significant financial challenges. Life insurance is another important protection tool, especially for people who have families or dependents. The purpose of life insurance is to provide financial support for loved ones if something happens to you. Disability insurance is often overlooked, but your ability to earn income is one of your greatest financial assets. If you are unable to work due to illness or injury, disability coverage can help replace lost income. Your paycheck is what funds your lifestyle, savings, investments, and financial goals. Protecting your income is a critical part of protecting your future. Homeowners insurance and renter's insurance also play important roles. Your home and belongings represent significant financial value. Insurance can help protect against major losses caused by accidents, damage, or unexpected events. Auto insurance protects not only your vehicle, but also your financial responsibility if you are involved in an accident. The key is not simply having insurance. The key is having the right amount of coverage for your situation. Being underinsured can leave dangerous gaps in your protection. Being overinsured may mean spending money unnecessarily. Reviewing your policies regularly helps make sure your protection matches your current life circumstances. As your income grows, your family changes, or your assets increase, your insurance needs may change as well. Financial protection is about creating balance. You want enough coverage to protect yourself without creating unnecessary financial strain. Insurance is not about expecting something bad to happen. It is about making sure one unexpected event does not erase years of hard work. Another important part of financial protection is protecting your assets and reducing unnecessary risks. Many people work hard to build wealth, but do not think about how vulnerable those assets may be. Protecting your assets means creating strategies that help preserve what you have built. One important step is managing debt responsibly. High-interest debt can weaken your financial position because it reduces your ability to save, invest, and handle emergencies. Credit cards, personal loans, and other high-interest debts can quickly become financial obstacles if they are not managed properly. A strong financial protection plan includes reducing harmful debt while avoiding taking on unnecessary obligations. Another important strategy is protecting your identity and personal information. Identity theft can create serious financial problems, including unauthorized purchases, damaged credit, and complicated recovery processes. Using strong passwords, enabling multi-factor authentication, monitoring accounts, and reviewing credit reports are simple steps that can provide valuable protection. Cybersecurity is becoming increasingly important because so much of our financial life exists online. Bank accounts, investment accounts, payment information, and personal records all require protection. Another area of financial protection is legal planning. Creating proper documents such as wills, trusts, and beneficiary designations can help ensure your assets are handled according to your wishes. Without proper planning, families may experience unnecessary confusion, delays, and financial challenges. Estate planning is not only for wealthy individuals. Anyone who owns assets, has children, or wants to protect loved ones can benefit from having a plan. Financial protection is about thinking ahead. It is about asking important questions before problems happen. What happens if I cannot work? What happens if I pass away unexpectedly? What happens if my identity is stolen? What happens if my family needs access to my financial information? Creating answers to these questions gives you control and confidence. The best financial protection strategies are built before they are needed. Income protection is another critical part of a complete financial protection strategy. Your ability to earn money is one of your most valuable financial assets. Many people protect their homes, vehicles, and possessions, but forget to protect the income that pays for everything. Your income supports your bills, savings, investments, and future goals. Without income protection, an unexpected event could create serious financial pressure. One way to protect income is by building multiple income streams. Relying on one paycheck creates vulnerability. Creating additional sources of income through investments, side businesses, or other opportunities can provide more financial flexibility. Another important strategy is developing valuable skills. Your ability to learn, adapt, and increase your earning potential is a form of financial protection. The job market changes constantly. Developing new skills can help you remain competitive and create additional opportunities. Retirement planning is another major component of financial protection. Many people focus on their current financial situation, but forget to prepare for the future. Building retirement savings through accounts like 401k plans, ERAs, and other investment strategies can help create financial security later in life. The earlier you begin preparing, the more time your money has to grow. Another important step is creating a financial backup plan. Ask yourself what you would do if your income changed tomorrow. Would you have savings? Would you have skills to earn additional income? Would you know which expenses you could reduce? Having answers creates confidence. Financial protection is not about eliminating every risk. That is impossible. It is about reducing unnecessary risks and preparing yourself to handle challenges. Life will always have uncertainty. However, a strong financial protection plan helps you face uncertainty with a strategy instead of fear. Preparation creates opportunity. The complete guide to financial protection comes down to one simple idea: protect what you build. Making money is important. Saving money is important. Investing money is important. But none of those things matter if you do not have a plan to protect your progress. A strong financial protection strategy includes an emergency fund, proper insurance coverage, responsible debt management, identity protection, asset protection, income protection, and future planning. The goal is not to become afraid of financial risks. The goal is to become prepared. Financial protection allows you to take smart risks because you have a safety foundation underneath you. When you have savings, insurance, and a financial plan, you can pursue opportunities with more confidence. You can invest for the future. You can grow your income. You can build wealth knowing you have systems protecting you. The biggest financial mistakes often happen because people wait until after a problem occurs to create a plan. Do not wait for an emergency to start preparing. Start today. Review your finances. Build your savings. Protect your income. Update your insurance. Secure your accounts. Create a plan for your future. Every step you take creates a stronger financial foundation. Financial success is not just measured by how much money you make. It is measured by how well you protect, manage, and grow the resources you have. If this video helped you understand the complete guide to financial protection, make sure to subscribe, like this video, and share it with someone who wants to create a stronger financial future. Because we are building real financial progress, one step at a time.